Hello friends, welcome to Nirmal. I am Piyush Jain, and today we are going to put the spotlight on the banking sector, finance sector, and host of innovations happening in the sector. But also we are going to actually be talking about what could be the impact of the recent move made by the Reserve Bank of India, the regulator, the entity which takes care of entire financial activities, all the companies, supervises them in the sector, makes rules for them. And we heard last week, recently, over the last few days, that RBI decided to remove 2000 rupee notes from the circulation. Now, this impact, if you take a look from the perspective of the volume share was largely 1.5% in the total notes in circulation in the country. Value share perhaps could be more than 20%. But what it implies for a common man, for viewers like you, what it implies for the economy, what perhaps it could imply from the perspective of either inflation or any financial impact. To understand all of that qualitatively, let me now welcome our guest today, industry expert, veteran, very well known in the industry, Mr. Ashvin Parekh, managing partner of Ashvin Parekh Advisory Services. Sir, welcome to the show.
Sure.
So, sir, my first question to you: after many years from demonetization, we now actually have been heard from the Reserve Bank that they intend to remove the notes of circulation. So, what it largely implies, why they were caught now, and if they're removing one part of the notes from the circulation, are they visualizing that now 500 will be the sort of de facto position of 2000? Like, what's your thought?
Sure. So let's start with where the whole thing began. I thought, what seems to have happened is, and this is my impression, that much before even the demonetization was announced, I mean, a little before, RBI seemed to have sort of been preparing for putting new denomination notes. And during that period, I mean, before demonetization, if you see some of the press kind of media coverages on new types of notes, and so there was this mention about 2000 rupee note also. But then, of course, what happened is with demonetization, it was decided to put them in circulation. So, I mean, my guess is that 2000 rupee or denomination note wasn't an outcome of demonetization. Perhaps they were prepared to really put it in circulation because as soon as demonetization was announced, 2000 rupee notes came into circulation. So, I mean, that was the first observation. I mean, many of us asked ourselves this question, and I mean, this question came up in our minds. We said, why 2000 denomination? I mean, if you look at most progress economies, whether it is the US or whether it is the UK, you don't get 100 dollar notes any longer. You don't get $200 or 500 notes. 500 is never printed. 100 is actually very little at one point in time. There's all withdrawn. UK also now the highest denomination is just about 50 basis points. So in the backdrop of that, one wondered what is this 2000 rupee note going to do in our state of West Bengal. Now, after demonetization, however, and when 2000 denomination note came into circulation, one started really observing that after a little while, in just about a year's time, 2000 rupee notes were out of circulation. No ATMs were dispensing them or whatever. And one guessed, I mean, one may be very wrong, but one guessed that once again, for the note holders, this was in fact a better option compared to holding a 500 or a 1000 rupee note. If you had your income, which came in a certain manner in cash, more than in other forms. I mean, particularly digital now. So, I mean, this 2000 was a bit of an enigma in that sense, I mean, a question mark. Now, I mean, RBI, of course, must have realized because they stopped printing it. The last they printed that was in 2018-19, then they stopped printing it. So they must have realized that, what's the point in printing notes which are going to be out of circulation. So I think the idea of withdrawing 2000 notes is a very good one. I would by no stretch of imagination call it as demonetization. But I would certainly say that, the kind of difficulty that the economy faces on account of such decisions, they must be kept in mind somewhere. Because right at the time when you make a decision, and that goes to the next part of your question, what what happens now, for instance? I mean, will it be replaced by 500 rupee notes, or again would they like to bring 2000, I mean 1000 rupee note into circulation? One doesn't. There's a lot of speculation around that. But my one line submission would be, whatever view RBI takes, let them take a little long-termish view, because these disruptions really create a bit of problems at the grassroots level, basically. So that was one. Two is with digitalization of currency now in a big way. I mean, to the extent that with UPI settling a large amount of what was earlier settled in cash, though except one must not make a mistake, at the rural and semi-urban areas, there's still these notes used, smaller transactions and all the settlement happens through these currency notes. So I think some sensible long-termish approach is essential. I mean, otherwise it costs both the government and the regulator a reputation risk. Saying that they keep on changing the denominations too often, basically. So,
Right. And so from that perspective, if I just read the numbers here, we are talking about roughly 42,000 crores in sort of value, and almost 2.1 crore notes in circulation. So, as per you, like September was given as a deadline. Is that something where we are going to see a smooth sort of passage from 2,000 to 500 or 100? Will that be something very smooth?
see, I'll tell you what may happen now this time. I mean, it's not like demonetization. So this time, I suppose the smoothness will have to be worked out by the system itself. Let me articulate my thoughts. You see, I mean, right from like now, for instance, if let's say the traders, those who want to conduct transactions, refuse to accept 2000 denomination notes, then automatically those who have them will have no option but to really go to their banks and get smaller denomination. I mean, there is an opinion, there are two sets of opinions. The school of that discussion is still out there, saying, look, should the banks keep a record of those who deposit? Should the banks not keep the record of those who deposit? I thought earlier demonetization failed, I think, to my mind, to capture all that detail. Some parts of banking system were not prepared. Particularly, I mean, I'm told that the cooperative banking system was not totally prepared, and therefore they did not keep too much of a record. In which case, the whole purpose of demonetization to track the unaccounted for money into the system, perhaps got. And then we saw immediately after that people who deposited huge amounts. Notices were sent by income tax department, but they just remained there. I mean, nothing more actually was done. So I thought, I mean, once again, here also, there is to be some clarity. I mean, you cannot have two sets of banks, one that demand detail from the customers and one they don't. So I suppose, once again, RBI will have to step in and make it more clear. I mean, State Bank of India took the lead and they said, look, their branches will be open and you can exchange those notes. So maybe, I mean, SBI had some dialogue with the Reserve Bank of India earlier. That's the impression one is getting. That there is no need for anybody to keep record of those customers who exchange notes. But I mean, I still believe that it's a little confusing, Piyush.
Right, sir. And from the current situation, if we move on, and you would have actually seen how the banks have really performed from the perspective of earnings, from the perspective of in the current scenario right now, the interest rate situation. So amongst all this, how are the banks placed right now? How are you looking at the overall banking sector?
Sure. So I suppose when we go into that question, I think four or five factors need to be really examined more closely. One is if I look at, let's say, the entire banking during the COVID period, a little before and then after and during. So one, of course, the immediate thought that comes to my mind is that before COVID happened, NCLT had started taking roots, IPC had started taking roots. In some form, we saw that financial lenders were getting empowered, Piyush, and the recovery was becoming far more effective. I mean, not totally effective, but much better than what it used to be earlier, basically. So things were getting resolved. They were getting a lot of attention from the bandwidth, senior bandwidth at the banks. So we saw that. I mean, we saw that just before that period, immediately after NCLT happened, we saw that private sector banks had already started recovering much better compared to public sector banks. But then public sector banks were also thereafter, they soon followed. I mean, they also realized that they had to really do that. So one factor was that. The second important factor was during COVID, I thought both the government and the central bank really held the economy and everything in the economy. I mean, including currency, notes in circulation, printing of currency, managing debt on one side, but at the same time managing liquidity on the other. It was very well programmed. I mean, compared to some of the other economies, we saw. So if you have inflation which cannot be only controlled by monetary policy, that's something we are seeing in US and other economies. There are other factors that play out. Then I suppose government closely working with the central bank becomes very critical. I mean, in the Indian context, I think the Indian banking and the Indian economy benefited a lot out of that. I mean, everything was well controlled. I mean, in that period, I must say. The liquidity was pushed into the system. Now it's getting pulled out of the system also in a calibrated manner. So that's the other factor which has really protected the banking system, I must say. Otherwise, deposit runs and other things could have possibly happened. That's something we saw in the US with major banks failing, in the US, and a panic that is created in the US. So I thought in that regard, second factor was that sort of, some kind of a stability was offered by both the government and me. For the first time, Piyush, I realized that the emergency credit lines which were offered in two programs, one and two, both of them were guaranteed by the government, which no other bank has done, no other central bank or no other government has done outside of India, which was a remarkable move on the part of the government. So to that extent, it protected the banking system. So up to now, what was happening was that all such crises were, managed at the cost of the banking system. We didn't have that. Third important factor, I think the bandwidth of the bank also came up, rose to its occasion. The merger of public sector bank, people were wondering what could have happened. It may not have got the desired results. But one important outcome of that was that the recovery was fast. With consolidation, the recovery became quite fast. So I think the system could recover almost about 8 lakh crore worth of money from out of the system, which is a huge amount. So it made the banking balance sheets very robust. Now the fourth factor, around the same time the economy was also it started performing well. It had bounced back. It came out of the COVID perhaps, as a large nation of so many people with a huge population, we came out much faster compared to other comparable kind of economies. So to that extent also, when the economy is buoyant, the behavior changes of the borrower also. The borrower wants to repay, get a better price from the banking system, for his track record. And so to that extent, I would say there was some amount of optimism in the air, and it still persists. So banks have healthy balance sheets, borrowers are becoming far more disciplined. They know that with growing economy, they can really repay much better, much easily. Liquidity is available. So those factors have played out, I suppose. So in the end, therefore, what has it brought us to? It has brought us to two things. It has brought us to a good point, but it has also brought us to a point where, rampant credit expansion could also lead to once again more problems later on. So we know that some sectors are booming at the moment. Auto sector is booming. Some form of real estate boom is seen, not too much, but it's there. Cryptos have sort of followed it. So savings are once again getting channelized into proper financial and physical assets. So to that extent, I would certainly say that the banking system is to be far more careful now compared to it would have been 6 or 7 years ago. If they throw that good money once again after bad money, then they are the ones to be blamed and they are the ones who will suffer, quite honestly. So I thought 2 quarters from now, if I analyze Piyush, things will start looking up much better for banking system.
Oh, you're saying that 2 quarters from now, uh, I would say in other words, we can be more bullish about the banks.
We can be very bullish, and that trend will continue for another 6 to 8 quarters. I mean, I would believe so.
Okay.
But thereafter, I think everybody, the market, that is the capital market, the investors, shareholders, analysts of the banking system, will start examining the quality of credit very closely. Those banks who will demonstrate, you know, sort of diverse application of credit or application of funds. And those who are mindful of sectorial changes. I mean, auto may be extremely good today, but 4 years ago we saw when auto was down, banking system had a major problem. Uh, I mean, aberrations keep on occurring. Go first is an aberration now. So, I mean, how well the banking system will tackle it is one of those issues. So I will certainly say that after about 6 to 8 quarters of a good run, when the economy may continue to grow at about 6.5% to 7%, somewhere thereabouts. You know, uh, then once again we'll have to watch the cycle again. So, but good quality credit and a close monitoring of credit is becoming very critical. So there also, once again, if I have to express my own personal view, some part of public sector banking is now readied itself, but the rest of public sector banking is still not ready. So for examining a good, I mean, introspecting the quality of the credit. So there's task before the banking system, I would say.
But from that perspective, what's the role of new age fintechs? Because we are seeing even actually some listed companies. For example, there is one like Guru Capital, completely fintech. And there are many such companies which are either actually doing work on fintech. What's the sort of impact you see from the rise of new age fintechs right now, smaller, some larger, versus the banks? How's the competitive intensity is going to look like? Are all we would be saying that both are operating in different space and both would be maintaining their current earnings trajectory?
No, they will. I suppose what I mean, that's a very important question. This question keeps on coming to my mind as well, because I'm going to devote my next few years to fintechs. But I'll tell you what is happening over here. I thought, I mean, if you analyze the annual budget last year, I mean, the February that was announced this time, if you examine, there are 7 programs. It's called Indra Dhanush, and there are 7 programs. But of the 7 programs, each one is so dependent, whether it is education, agriculture, each one is so dependent on technology. Piyush. I mean, we seem to have recognized as a nation the significance of digital delivery, in a big way. I mean, COVID could have changed that behavior, but we recognized it. Now, at the same time, if you look at the growth of fintechs in this country, with about 3,500 incubation points, with IITs, IIMs, and technology sort of institutions in this country spread all around. You coming out with a new set of entrepreneurs. So this is not like the industrial houses ka bacha log or whatever. But this is like, I mean, fresh students coming out of colleges, and they don't have capital, but they have ideas, and they want to really use up those ideas, and they want to really monetize. So, and I've seen fintechs, Piyush, in all 4 areas. I mean, some of the fintechs that you name, for example, let's say, so whether it's like product or new customer segmentation, Gen X and Gen Z, they are really addressing. But at the same time, let's not forget the other generations also, that is the older ones, the blue and the other ones are the baby boomers, and they also are equally on to technology. So I mean, to that extent, fintechs have a huge place. Certainly, fintechs have done something remarkable. They've broad-based the market, really. And so, to that extent, I would say even the smallest guy, I mean, a retail guy, physical retail guy, now believes in taking his orders through digital kind of platforms and all, which is an excellent sort of Fiji digital or whatever they call it. I mean, it's an excellent model of applying whatever is available, the platforms and everything available for the
In
purpose
fact,
of.
while you're saying, I'm just adding, like, look at the bigger companies. GeoMart is now actually sort of partnering with smaller retail kirana stores. They are using the apps and retail platforms. They are using the POS machines POS machines are giving data for really sort of giving working capital loans to these kirana stores, as you're just saying. So it is penetrating at the sort of ground level.
It is. And I suppose in the backdrop of that, I mean, if you now see NPCI and UPI in the backdrop of that, the backbone is available. And that's the biggest thing. You don't come across something like this in the other market. So, I mean, most of the fintechs ride on that. So, from the regulator's point of view, the comfort is established because the evidence is available, the trail is available, and they can simply ride on it. There is no, when it comes to payments and settlements, there is absolutely very little now to innovate. I mean, it's so very well oiled kind of a machine that is already there. Fintechs have to really grow on that, basically. So they are putting up their ideas and new views. You know, now look at the other side of it. Look at banks, insurance companies, mutual fund companies. They are also not developing those solutions on their own. They are also just getting those solutions. They are acquiring them or they are licensing them. So it's a different world we are living in. But I still believe that one of the major distinguishing factors for our economy, in the last 2 years and I think for the next few years to follow, is fintechs quite clear. Fintechs will have a much larger role to play in every part, banking or you swiping a card, for example, at your ATM or at a merchant. Look at several fintechs who are really assisting banks in doing so many things in between. I mean, verifying your sort of identity from there on to so many other things. So, to that extent, I mean, I would certainly say that Indian financial services has demonstrated, that they can really coexist. They are not competing with each other, and it's a survival of fittest, Piyush. If those banking companies, I'm not for a minute saying public sector because some of the public sector banks are far ahead in that, but the others are lagging behind. Some of the cooperative banks are fairly behind. So they may have to really work closely with the fintechs, imbibe new methods of reaching out banking to the customers.
Right. And from that perspective, I think we know you're working hard in developing sort of fintechs, and I think we'll also actually give you best wishes for that. My last sort of topic on which actually I wanted to also get in touch with you would be from the perspective of how you're looking sort of at the markets right now from a listed space perspective. I asked you from a banking perspective where you said that perhaps through what is from now, it will be looking more bullish. We talked about fintechs, we talked about RBI. Also from the perspective of where we are right now, and I would say the interest rate cycle there's one cycle which is completed now. We might be looking at a pause, and then somewhere down the line, some months, some 1, 2, 3 quarters down the line, we might start seeing interest rate cuts. From that perspective, uh, how do you see banks' position right now from a viewer's perspective, from stock perspective, from stock market perspective? Are we looking at a continuation of a strong earnings trajectory, or you see some moderation in the earnings profile?
No, some moderation might happen, Piyush. And the reason is very simple. At the moment, what happened was, I mean, when the rate hikes were happening, the transition or the transmission was much faster in lending. Deposits, we saw the transmission gradually.
As always, as always.
Now, what it does is that it improves the NIM, basically, the net
Yes.
interest margin. Yeah. Now, increase or improve NIM brings in an element of inefficiency with it. I mean, as an observer of the industry for the last 40 odd years, I've realized that each time you go through an upswing, inefficiency walks into the system, basically. Yeah. Now, productivity also suffers, in addition to inefficiency. So, I suppose that's something the banking system will have to be very careful about. Fortunately, compared to what we've seen up to now, I think the so-called activism on the part of shareholders, the activism on the part of media, and also research organizations and others is so good, that let's say if there are inefficient pockets, it's not going to take as long as it used to detect those and immediately bring it up. But the banking system will have to be very careful about it, because they shouldn't get too complacent about it, saying that ये NIM तो चालू रहेगा, then NIM will certainly come under pressure.
So basically, what you're saying is June quarter, September quarter, some moderation can happen, primarily because of the adjustments which are happening. But then after that, the trends will start getting better.
The trends will
I'm
start getting better.
trying to match here 2 quarters and then the pattern here.
No. So I mean, let's say after 2 quarters or 3 quarters, I mean, whenever inflation is really a sort of main factor here. But let's say when the rate reduction begins, then at that point in time, once again, NIM will of course come under pressure. So because once again, banking system will do the other way around. They'll start reducing the deposit holders' interest, and they will sort of hesitatingly transmit that into the lending rates and all. But be it so, NIM will certainly suffer. In which case, let's say, we might find that they will have to identify pockets of inefficiency there for themselves. So I suppose more and more use of technology, and evolving internal efficiency parameters and productivity parameters can become very critical, I suppose.
Right, sir. So I think with that thought, perhaps a bit of optimism in the banking sector, a bit of caution perhaps in the near time. But as you just said, fintech technology, so all the banks again which are really sort of in the forefront of technology, perhaps our viewers will be looking them very closely. And we will actually stay in touch with you for following up on what work you're doing on the fintechs. With that, sir, we come to the end of this conversation. It was a pleasure talking to you, and we'll stay in touch. Thank you for coming on our show.
Thank you. Thanks.
And dear viewers, hope you enjoyed the show. With that, it's the wrap.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.